Thanks, Julie. Well, Fed Reserve Chair Jay Powell spoke earlier in response to that emergency rate cut we got today. Take a listen.
We're always going to make our decisions in the interest of the American people to carry forward and try to achieve the mandates that Congress has given us. And we're never going to consider any political considerations whatsoever. We will not do that, and it's very important that the public understand that.
That was Jay Powell. We are covering all angles of this emergency Fed cut. And for more, we want to bring on Wells Fargo Securities rate strategist Zach Griffiths in Charlotte, North Carolina. So, Zach, your rapid reacts here as we've watched stocks go up and down and really whipsaw in the last hour or so after that emergency cut.
Yeah, it's been quite the reaction, and I suppose that's a little bit unsurprising. We sort of thought that a big move was coming, whether it was going to come before the March meeting or during the March meeting. Obviously, we got it before, and to a certain extent, it seems to be what the market was asking for, but the Fed acting outside of a meeting seems to be causing some mixed reaction. Does the Fed know something that we don't? Are things really worse in the economy than the data would appear at this point? It's really hard to parse that all out right now.
You know, the thing that I'm really curious about, though, they could have waited just until the meeting on March 18th, and now this does make people think that there's more volatility. It is going to make people more concerned than they might have been otherwise. Why now?
So one thing we've been talking about for a while, and the Fed has been talking about for a while, is that when you have limited monetary policy ammunition at this point, it's better to use it sooner than later. And I think they're just demonstrating and acting on that view that it's better to use the limited moves in the policy rate that they have before the economy materially worsens, which we haven't seen in the data yet, and that's yet to come.
Hey, Zach, Brian Chung here. So you're working with rates. I'm wondering how you're interpreting the curve so far. We've seen the U.S. Treasury, the 10-year at least, kiss an all-time low. So I'm wondering, what are you viewing in the curve right now, and what is that telling you about what the next steps might be for the U.S. economy?
Yeah, so the big thing we've been looking at, and this is what we were looking for if you did get 50 basis points, whether at the meeting or before, is a steepening of the curve, which is a welcome development in some ways. If you recall, last year the curve was very inverted, and even inverted at points between the 2s and the 10s, and that caused major recession fears, which I think also contributed to the Fed's calculus on these mid-cycle rate cuts. So the curve steepening is a welcome development. I think the 10-year at a low level reflects the amount of uncertainty that there is out there right now, but I think the curve steepening is definitely a welcome development for the Fed at this point.
So what is it going to mean for corporate credit, right? Because we've seen this sort of seizure in the corporate bond market, this halting of issuance. Is the Fed going to get the desired effect there from this rate cut?
It's hard to say at this point, but it definitely is something that factored into their decision to cut rates, make borrowing more attractive, and give the opportunity for financial conditions to loosen a bit, as they have tightened considerably over the past couple weeks with credit spreads widening a bit and equities falling. So I think reducing some of that tightening of financial conditions was a big driver of the Fed's move today.
All right, there's a lot to keep watching here. Wells Fargo Securities rate strategist Zach Griffiths, thanks for joining us.
Thank you.